Welcome back, viewers. So the focus is on the big stories. And starting up, India's equity benchmarks edged down in early trading, dragged by continued weakness in stocks and ongoing concerns over the global trade tariffs. At market open, both the Nifty 50 and the Sensex were trading lower. Nifty dropped to 0.4%, while Sensex was down to 85 points. Of course, Dr. Sharat Kohli joins me live this morning to share more details. In fact, as the concerns have been mounting over the prevailing situation on the ongoing tariff trade worldwide, this is the update of the market as the stock markets also in fact open at Nifty 5 and Sensex traded lower. Dr. Sharat Kohli, as you also in fact have been keeping up with the values that we are trading amid the ongoing concerns over the global trade tariff, how do you look this morning at the first reaction to how the markets are behaving, especially Sensex, which has been down to trade lower?
Good morning to you and NewsX viewers. I think the markets were expected to be weak because of the weekend developments that happened, especially with regard to tariffs. President Trump levying tariffs on Mexico, on EU at about 30% is not very good news. I think it is believed that America might sink into recession. It will also disturb the world trade cycle. It will disturb the world supply chains. Also there is another reason for the market to be a bit subdued, which a lot of people have not noticed, that Q1 financial year 25-26 ended on 30th of June, and it is mandatory for stock markets to get results of these listed companies out, at the end of the quarter. So between 1st of July and normally 1st of August, most of the corporates that declare the results. So some of the results of Q1, especially for IT companies, have not been very encouraging. That is another reason why the markets are a bit subdued, because as far as the international factors like tariffs are concerned, that has been pretty much digested. I mean, the markets have reconciled to the fact that President Trump is not going to, relent as far as tariffs are concerned. He's just going to go on. So that is factored in. But I think these weak results, at least in the initial fortnight, has not gone very well with the market. It is being expected that if the results are weak, the market may further go down. The undertone of the market right now, as we call it, is sell on rise. Sell on rise means every time there is a slight improvement in the market, the traders and investors, they come down to sell to realize profits. So yes, you're right. I mean, overall, the international scenario is not very good. We've seen aggravation of Russia-Ukraine as well. Over the last few days, very, very severe attacks coming from Russia on Ukraine when President Trump's peace efforts have gone in vain. Also, people are dying in Gaza. Israel's attack continues. So I think the geopolitical tensions are as it is there. Tariffs have obviously added to the pressure over the last few weeks, and on top of that, weak results coming from the Indian corporates has done no good to the markets.
Absolutely, Dr. Sharat Kohli, as you're putting this all in perspective, as the stock market update remains to be crucially monitored. What also important is to the kind of precautions that one should also look at before they invest into multiple stocks and also the trading companies. How do you also offer a word of caution and the advice that one should look for and continue to also keep an eye out over the developments that have been taking place, not just in the economy that has been circulating in the Indian discourse, but also how the global shares also are plummeting and having a great impact on that?
I think the advice to investors is that, as a matter of principle in stock market, it is said that for long-term investor, any time is a good time to invest. So if you're investing for 5-10 years, I think you can enter any time. But most people do not have that patience. I've seen investors who start yielding in, 6 months, 1 year, 2 years. For them, my advice is that they should buy on dips. That's my first advice. My second advice is do not invest your entire chunk of money at one go. So slice it off into smaller, pieces in tranches and invest every week, every fortnight, every month, whatever you feel comfortable. And third is look for undervalued stocks. If you look for undervalued stocks, they will never disappoint you in the long run because they tend to spring back soon as the sentiments improve. So those are the 3-4 pieces of advice that I would like to give. For traders and investors who do very short term, that is daytime selling or selling, tomorrow, day after, or after a week, I think they are on a very risky wicket right now because the market is very volatile. It goes up, then it comes down. It takes one step forward, two step backward, sometimes one step backward, two step forward. So such volatile markets are very, very risky for short-term traders is what I would like to say.